ready to get on the
All
right
right.
path with Right Path Real Estate Radio with Jason Bible. Get the answer to your
This
question
guy.
that's keeping you from taking action and succeeding today.
I'm going to start a civil war on Facebook here.
Oh, Lord.
Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mics.
Welcome to the show. Welcome to the show. Jason Bible, Right Path Real Estate. Guys, I have a problem I need help with. And I'm expecting help from the Facebook crew. So for those of you who are watching live on Facebook, here's the deal. Yesterday I was hanging out with some real close friends of ours. We hung out. We went to the Sugarland, what do they call it? Wine and Food Affair. The Wine and Food Affair. And out there at the fairgrounds. We go every year. It's a lot of fun. My favorite food out there this year is it was a smoked beef rib croissant. So they take, you guys have ever seen like real beef ribs. They're like 13, 14 inches long. I mean, they're huge. And so they were smoking these ribs, and then they would put the beef in a croissant. It was ridiculously good. So that was my favorite of, at least of the food items there yesterday. I had a blast. Then we went over to some friend's house, and we got into a real interesting discussion. So this buddy of mine, he works in oil and gas on the risk management side, and his lady is a statistician. And so we were having a very in-depth conversation. Oh, and his brother's there, and his brother's PhD is in some kind of plant something. He's a plant science guy. So we got into a very heavy discussion about the difference between medium and mild. So, Facebook folks, what is the difference between medium and mild? I would love to know. I have no clue what the difference between medium and mild is. This is very important for those of us in Texas when we're buying our hot sauce, right? Or our salsa. What's the difference between medium and mild? I really have no clue. And then there's some stuff that's, you can get it, you buy something, like we were talking, that we got, what was it? We got something yesterday, and it was medium mild or mild. It had both of them in there to describe the intensity of this, whatever it was, salsa or guacamole or whatever it is we were eating. It was a mild medium or medium mild, something like that. So for Facebook folks, I'm going to put you to the test to describe what the difference between medium and mild is. And evidently you can put both of them together to call it mild medium or medium mild. I don't get it. I don't. It doesn't make any sense. Like, is there a mild hot sauce? Like, can you get medium hot? I don't understand. So if you guys could work that out. We had a very in-depth conversation in the kitchen yesterday about this whole medium mild thing. It makes no sense to me. So in any case, I'll let you guys on Facebook work on that. We're going to talk about real estate here on the radio show today. I'm going to continue the series that I started Friday talking about multifamily. And one of the things that we do whenever we start a new business is we start with the discussion about how big is the market. That's really the question we're asking. Hey, how big's the market? How big is the market? And what is that? I would imagine Elon Musk and the boys, when they got together to start that little electric car company, someone had to have sat down and said, how big is the electric car market? Like, how many of these things can we sell? Like, that's a good question to start with. In fact, I paid all these real estate gurus for years to teach me real estate, and not one of them could answer this question. How big is the single-family real estate market in the greater Houston area? Not one of them can answer that. Gee, wouldn't you want to know that? That'd be kind of important information to know. What if you knew how big the market was and the market was not big enough to allow another investor in? Would that be something important to know The answer is absolutely. So I'm looking at multifamily, and you guys know my disdain for multifamily right now, not because it's a bad investment or something you shouldn't invest in. It's not like gold. Like, I don't like gold. I just don't. I think there's a place for precious metals in your portfolio. We don't talk about that on the show, but I know guys that buy gold like it's going out of stock. It's a rock, man. It's not worth anything. It's like collecting diamonds. I mean, it doesn't make any sense to me. But anyway, so in fact, I'd much rather collect cars long before I collect gold. You guys want to look at a wild asset class? Look at collectible cars and art the last 10 years. The stuff that's been going on in those markets has been absolutely amazing. But in any case, let's get back to real estate. I want to know how big the market is before I get into a business. We're actually starting 2 companies. I got the LLC docs back last week for the event we're putting on in Sugar Land. So just so you guys know, I'm putting on a little event in Sugar Land. It's just for Sugar Land and Katy, Fort Bend County investors. If you're from Harris County, you're welcome to come, but it's really just for those of us who are investing down there. And I'm going to put on this meeting once a month. Actually, this week I'm going to talk about what those 5 elements are that you need to know to be able to calculate the rate of return for a piece of real estate. And I'm going to do a 5, it's actually, since we do this meeting once a month, I'm going to do a 5-month series on what each of those elements are and why they're important. In fact, not this month, but next month I'm going to talk about appreciation. But in any case, so before we start a business, we want to know how big the market is. Second company we're starting, we should sign the docs. If it's not going to be this week, probably next week. We will announce that on the radio show, and it's a nationwide company. First question we ask is, how big is the market? And we know how big the market is. Well, who are the competitors in that space? And what's fascinating is there's only one other competitor. So we look at the lay of the land and we're like, wait a minute, this one company has no competition and it's a nationwide, it can be a pretty big business. So of course, then the next question is, can we add value and really sell something there? And the answer is absolutely. So I'm looking at some multifamily stats on Friday, and I had this thought. How big is the multifamily market in Greater Houston area? How big is it? It's smaller than single family. It's way smaller than single family. I can tell you that. I mean, that just naturally, there are more single family houses than there are apartment complexes. That should be a no-brainer. That makes sense, right? There's only one type of buyer for multifamily. We know that. The only person that's going to buy multifamily is another investor. Unlike single family, where you could sell it to an investor or a homeowner. So, how many multifamily units are there in the Greater Houston market? Here's why this question's important. You can go to a dozen real estate seminars in Houston at any one time. You can go to the weekend events, like we have a weekend event. Well, there are a bunch of multifamily guys that teach multifamily in the same way that we teach single family. Come on out to a free event or come on out to our weekend retreat. They do bus tours. In fact, we did our bus tour on Saturday. And I've been in some of these rooms, and you look around the room, there's 100 people in there, or 200 people, or 300 people. Now, granted, maybe only 10% of those people will do real estate, but let's say the room's 300 people deep, and 10% of them are going to go buy some multifamily. That's 30 people. Well, how many multifamily units are there in the Greater Houston market? And I found a great report. In fact, it's the year-end 2017 Real Estate Outlook. The report is actually on Texas A&M, their Real Estate Center webpage. It's the Trans-Western Outlook. And there's some really fascinating things in here. In fact, I'm going to read you a couple of things, and if you guys have listened to this radio show for any period of time, some of the things I've told you about multifamily they talk about in this article.
2 minutes.
One of my favorites here, let me see if I can find it pretty quickly, talks about Hurricane Harvey. One of the things I've said is Hurricane Harvey bailed out multifamily. What does that mean? It means that all those folks that were displaced had to live somewhere. Here's the fascinating thing about real estate. You gotta live somewhere. This isn't like selling a Twitter or a Tesla or some junk from Amazon that just gets shipped over from China. You really don't need that stuff. But you know what? You need a roof over your head. That's one reason why I will always be in real estate in some fashion. You got to have a roof over your head. You're selling one of the most important things in most people's lives. They've got to have a roof over their head. I mean, that's only second to like food and water. Got to have a roof over your head.
1 minute.
So when we get back from the break, I'm going to go through this report, but I'm going to talk about how big the multifamily market is. Because if you're sitting in one of these weekend events or on some other type of event, you're getting real excited. I'm going to go do multifamily. It's going to be great. Woo! Don't you want to know how many units get sold on a monthly basis here in Houston? Or how many there are total? Are there enough multifamily for you guys to invest in? We get back from the break. We're talking about how big the multifamily market is. It's Jason Bible, Right Path Real Estate.
Mic's off.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts, Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825 or you can reach us online at foundationcheck.com.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at andersonadvisors.com and don't forget to tell us you heard about us at Right Path Real Estate.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
You found or inherited a great investment
1
property.
minute.
Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906
I
or
love
visit our website,
the internet.
jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, Jay, you ready?
Yes.
All right, cool. Hot mic.
Welcome back. Jason Bible, Right Path Real Estate. I love the internet. I'm building a bike right now, and I went on the bike forums, dropped one question in there. I must have 50 responses. This is great. Love the internet. Let's talk about multifamily. How big is the market? How big is the market? You just went to a weekend event. You signed up for the coaching package. Multifamily. You're all rip-roaring ready to go. I'm going to take over the world, become a millionaire in multifamily. Woo! Just one problem. There's just one little problem with that plan that you got sold. There ain't a whole lot of multifamily out there. There's just one little problem with that plan. And that is there's not a lot of multifamily. There's not. You guys want to know how many units there are? Let's scroll down here. Number of apartment communities in the greater Houston area. 2,728. I'm going to say that again. 2,728. About 2,800 multifamily units. Let's call it 3,000. Call it 3,000 multifamily. This isn't doors. There's about 700,000 doors. 650,000 doors. Let's call it 3,000. There's 3,000 multifamily complexes. Maybe it's a good way to put it. It's 3,000 of them. Now, that sounds like a big number. You think 3,000? Well, geez, I just want, I want a couple hundred doors. I just want 3 or 4 of these things, right? Well, here's the problem with that. This report I'm looking at does not break down how many Class A units there are. Typically, Class A and even B+, the likelihood that you will ever own anything like that is pretty small. The cap rates are incredibly small on those things. They're very, very expensive. Typically, the folks that own Class A's are like insurance companies, REITs, some hedge funds. Class A is really not something you'll ever buy. A lot of them are built. That's just, you'll see them, they get traded from time to time, but really you're really just not going to do Class A's. Now, can you pick one off every now and then? Sure. I know some multifamily guys that, have been investing for 20 years, 10 years, 15 years, and they pick one off every now and then. But here's the problem. There's only about 3,000 complexes in the greater Houston market. Now, are all of those for sale? No. No, they're not all for sale. In fact, they've got a chart in here where they show sales volume, and sales volume has crept up since about 2010. Like, this is the most you've seen in sales volume I think that Houston has ever experienced, meaning the number of units that are being sold, number of complexes being sold. Only about 3% of multifamily units will be for sale in a year. So you're talking about 120 units, 120 complexes a year. But Jason, you don't understand. I only need, one or two of these things. Yeah, you're right. But there's you and 10,000 other people that are trying to do the same thing. So what does that do to the prices? You've got so many people chasing after so few deals. So few deals. We're talking about less than 120 complexes get sold in a year. That's not just that's the greater Houston market. That's like Conroe to Galveston, Brookshire to almost Orange. It's 10,000 square miles. And in that 10,000 square mile zone, only about 120 will get sold this year. So we're talking about 8, 9, 10 of these things get sold a month. The likelihood that you'll become a gazillionaire as a multifamily investor is pretty slim. Now, if you talk to a lot of multifamily folks like I have, and I am not a multifamily investor yet, the most successful guys I know have not bought anything in about 2 years. In fact, they've sold virtually everything because there are people willing to chase after these marginal deals. And that's what most of this stuff is now. It's marginal stuff at best. I mean, you're seeing Class C's at like 7 caps, 60, 70, 80, 90 grand a door, when 10 years ago they were trading for 10 and 15K a door. Yes, that will come back. It always does. There's always a... Now, will it crash as hard as it did in 08 and 09? Probably not, but there's always a downturn. It's just a natural part of these business cycles. Someone asked me, well, Jason, why aren't you investing in multifamily? I said, well, for one, it's not real estate. I'm going to say that again so everybody gets it. Multifamily is not real estate. It's not. Multifamily is a business. It just happens to have real estate attached to it. It's no different than buying a machine shop, a strip center. You're at the end of the day, you're running a business. It just happens to have a whole lot of real estate attached to it. Very different than single family. One of the biggest advantages in single family that's an enormous disadvantage in multifamily is what's called liquidity. In other words, how fast can I sell something to raise cash? And multifamily, the bigger they are, the more challenging they are to sell. Not like single family at all. Single family, tenants move out, get the house all cleaned up, make it look nice, put it on the market, you're out of it in 30 days. And that's a retail sale. With a real estate investor, you can sell something in a couple of days. So one of the things I always ask the multifamily guys is, hey, what's the liquidity premium in multifamily? There's got to be a premium that I am paid as an investor because my money is so tied up in a deal. Money and time. I see a lot of these multifamily guys, they'll get an apartment or two, and you see them on Facebook, they're taking vacations and stuff, and it seems real cool. And then there's always a picture of them talking about how passive multifamily is. A picture of them at the pool of their apartment complex, which I always find kind of strange. Because if it's that passive, what are you doing there? But in any case, let's go back to the numbers. About 3,000 units, 2,700 units, complexes that represent about 700,000 doors. And only about 3%, 3 to 4% will sell in a 12-month period. We're talking about less than 100 complexes. And you can imagine my dismay when I went to one of these weekend seminars for multifamily, and there's 300 people in the room, and 30 people ended up signing up for some kind of coaching package. The reality is those folks, just based off how big the market is, will more than likely never own a multifamily asset. The numbers are just too small. I mean, think about it. There's some guys here in Houston, a couple guys in Dallas and in Florida, and they teach these seminars all the time. Every month there's 30 or 40 of these new people that come out of these apartment seminars and are like, I'm going to go be a, king of the apartments. And it's like, yeah, just like the guy last month, right? And the problem is it doesn't matter how hard you work. There's just not enough of these things to go around. You got to think Houston is one of the largest markets in the country. So you get 9 to 10 of these things sold in the greater Houston market. I bet it's another 9 to 10 up in Dallas, Fort Worth. I bet it's 5 to 7 a month in San Antonio. I mean, if I'll tell you, when I get into a business, I like it when there's tremendous market opportunity. Because one thing that it allows you to do, let's say in single family, is there are so many opportunities that even if you mess one up, it's okay because you just buy the next one. Like, that's what makes single family so forgiving. You buy one wrong, let's say you paid too much for it, or the rehab was bigger than you thought, you're not going to make as much money on it. No big deal. Just buy another one today. You don't. But in multifamily, that's a whole different deal, man.
2 minutes.
You're one of 9 or 10 guys that are going to buy one this month. That's it. And here's the other thing. You come out of some little apartment seminar, who are you competing against? You're competing against some incredibly sophisticated investors. Some of these people have been doing it for generations. That's completely opposite of single family. That's why it's so much easier to build a multi-million-dollar portfolio in single family than it is in multifamily. While the multifamily investor is sitting around looking for the next deal, it may take them a year. You just bought 50 houses.
1 minute.
I mean, to give you an idea of how few multifamily complexes are sold in a year, we buy more houses in a year than the entire multifamily industry in Houston sells in a year. Think about that for a minute. Just from a transaction side, we do more deals in a year than the entire multifamily industry will do in 12 months. And we're just one of a handful of other guys around Houston that buy that many houses. But there's a real advantage to going into an asset class like single family and being able to do a number of transactions because it's very forgiving. Multifamily, if you buy one of these things wrong, you are hosed because there's just not enough of these things for sale. We get back from the break. I'm going to talk more about this multifamily report I got here. It's Jason Bible, Right Path Real Estate.
Mike's off.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are you expecting to close accurately,
Thanks, Sabrina.
on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Are you looking for an
1 minute.
investor-friendly general contractor for your
Okay.
investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects,
That
which has
doesn't
helped
make
us to
any
create
sense.
our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and
Absorption,
complete the work in
trailing
a proper
four
order so it gets
quarters.
done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
That is
So give us a
interesting.
call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Talking about multifamily numbers today. Explaining the rationale behind really why we're not in multifamily right now. It's at, I don't want to say it's at a peak, because you really can't call the top until you're already, on the downside. But the 3 metrics that give multifamily its value are at all-time highs. Rental rates or lease rates, they're at all-time highs. Occupancies are at near historic lows or highs, depending on how you measure that. 80, 90% occupancy meaning high, so at all-time highs. And cap rates are at historic lows for 2 reasons. One is interest rates are still relatively low. The second thing is there's so much money chasing these deals. Shortly after Harvey, I was out in LA chatting with some guys. And they said, hey, Jason, if you were to put... Oh, they started out like this. This is at a happy hour, by the way. Hey, if you had $500 million, how would you deploy it in single family? And I was like, excuse me? What do you mean $500 million? $500 million is a lot of money. One of the advantages of multifamily is you can park a lot of money in one deal. 50, 60, 80, $100 million. Can't really do that in single family. You can, but you got to buy a package, and there's just not that many investors out there who build something that big. So there's an inherent attractiveness to multifamily for big investors. It's not uncommon. We run into this from time to time. We'll run into someone who represents a family trust, and they'll come down here to Houston and they'll buy a couple of multifamily complexes in a year or two. Some of them we even pay cash. I mean, where do you park 10, 20, $30 million that kicks off decent cash flow, and you get depreciation, and you get rental increases and all that other stuff, and it's relatively passive? Multifamily is great for that. Now, can you build wealth with multifamily? Absolutely. You sure can. But it's a lot easier and a lot faster with single family. A lot faster. One of the things I noted here on this chart is very interesting. For those of you in Houston and in Dallas as well, you'll know that investors, are putting or building new multifamily like it's going out of style. I mean, they cannot whip these buildings up fast enough. It amazed me when we were out in, again, to go back to, we were out in Fulshire weekend before last. And not only the price of houses out there, but also the multifamily. There was some multifamily right there off the off the West Park Toll Road. I mean, somebody's got the foresight to build that stuff out there. Here's a problem. As you bring more supply online, that necessarily impacts demand. Or not necessarily impacts demand. The demand for that product will impact its prices. Meaning, if there's more supply, demand's the same, prices are going to go down. What's interesting is they've got another chart on here with absorption rates. Now, what is absorption? Absorption is the number of units that are leased in a year. Meaning how much inventory, how many units can be absorbed by the market. And what I've always watched, which I find fascinating, is to compare the absorption rate, meaning what's the demand for my product in a market, with how many new units, new construction units are coming online. Look at this table here. 5,600 units were absorbed in that quarter. I think this should be quarterly. Let me look. Pretty sure. Yeah, absorption trailing 4 quarters. So 5,600 units. So about 20,000 in a year. Here's what's fascinating. Right next to it, they have the number of new units being built. It's 11,000. And they're expected to be online in the next year. So you have the equivalent of 50% of your absorption is being built today. Now, some of that has slowed down. Some of these multifamily, these are big investors. This is not, these aren't guys that went to a seminar. These are hedge funds and REITs and insurance companies, and all. I mean, these are big boys. These are the pros. They didn't go to old Bob's How to Get Rich in Multifamily. they got guys with graduate degrees that are modeling where to put the next 500 units they're whipping up. And what's fascinating is the sheer number of new units being built. Dr. Dotzauer made a comment at a month before last meeting at the Redneck Country Club. He said they're knocking down a lot of Class Bs and Class Cs, and in Houston, Class D. Yeah, we have Class D here in Houston. They're knocking a lot of that stuff down and putting Class A units up, which I think is ultimately good for the Class B and C investor because they're taking their product offline However, the problem is what happens when multifamily begins to slow down? When multifamily starts to slow down, let's talk about some of the reasons why that could happen. One is, let's talk about one of the biggest challenges of multifamily. Nobody really wants to live in an apartment complex. I mean, sure, some millennial kids getting right out of college, which is always weird because you're building a product around essentially a market that's broke. I mean, why? And that never made much sense to me. Like, oh, this is great. Let's go buy rental properties in a college town. And I'm like, I don't know if I really want to do that. But aside from, millennials and want to live in an apartment, or those folks that want to live near or in downtown, why else live in an apartment? There's really, if people can afford a house, I'm willing to bet 9 times out of 10 they're buying a house. In fact, why not just rent a house? In a lot of cases, on a per square foot basis, you get more house for the money. So whenever I look at multifamily, when I look at it through the eyes of the buyer, and I look at my own experience, I look at friends' experience, I read tons of reports and what the millennials are doing and all this other stuff. 9 times out of 10, if you can afford to live in a house, you're living in a house. Nobody want that whole couch surfing thing you did in college. You get 5 roommates, you get this sweet crib that's, closer to campus. That kind of gets old after a while. And at some point, you're going to move into a house. So what keeps multifamily from losing value? In part, it has to do with single family. How easy or how hard is it to get a loan for a single family house? And I'll tell you, lending standards are starting to relax a little bit. But I'll tell you what, it's hard to get a house. For someone who's in an apartment situation to then move in to go buy a house, it's tough to get that first house. $200,000 house. By the way, the friends we were hanging out with yesterday, they have a new neighborhood that's popping up behind them.
1 minute.
And we went and drove the neighborhood. I don't think there was a single house under $300,000. So one of the challenges for multifamily is if these interest rates keep going up, not only it's going to hit them in the cap rates. Typically, as interest rates rise, bankers will take a little bit more risk. People who maybe couldn't get a loan a year ago can now get a loan on a single-family house. And they're going to start moving into those single-family properties and leaving multifamily. We get back from the break, we'll talk more about what that process looks like and the impact single-family and multifamily here, at least what our prediction is over the next couple of years. Jason Bible, Right Path Real Estate.
Mike's off.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth. But
yeah, we'll see you at the 3-day, Edward. It's a good time.
At 713
The weekend retreat.
9911, or check us out online at nextgenappraisals.com.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary pier work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Multifamily versus single family. Did anybody settle the medium versus mild debate? What's the difference between medium and what's the difference between mild? I'll have to check in on Facebook, see where we're at with that medium versus mild debate. But here's the deal, folks. You've got multiple asset classes in which you can spend your time and your money in. And when I look at the numbers in multifamily, it's just not making a lot of sense to me. It just isn't. Now, back in 2009, maybe 2010, 2011, they made a little bit more sense to me, but I'm just not buying it. When you see a multifamily complex sell for $80,000, $90,000 a door and rents for, 90 cents, $1 a square foot, I look at that and I'm like, why don't you just buy a single family house instead? Because here's what I'll tell you. That single family house is going to appreciate much faster. I mean, how many of y'all have bought houses in the last 5 years and they've nearly doubled in value? I mean, it's absolutely insane. A buddy of mine yesterday, we were driving around his neighborhood, and he said, houses around here used to sell for $150, $160, $170. He said they're now selling for $250, $270. one of his neighbors, he met one of the neighbors a couple doors down, said, "Hey, when you guys moving in?" And he said, we're not moving in. We're buying rentals in here. He's bought 3 or 4 rentals just on that street. And the question is why? They can go in and buy one single family house with the appreciation alone and make $100,000 over 5 years owning it. Just on the appreciation alone. So when you're out trying to compare single family, multifamily, look at the last couple of years of performance. And then ask yourself, where are these multifamily units going to go? I mean, now granted, somebody could come along and buy your building and knock it down and build a Class A. Or maybe you just want to keep it for the cash flow. But I would really look at the difference between single family and multifamily and consider a couple of things. One is liquidity. If I want to sell this thing to get into another deal, how quickly can I sell it? The second one is, and I'm going to use this term even though I don't like it because the way it's used most of the time is it just grates on my nerves. And that is diversification.
1 minute.
If you've got a multifamily building and the neighborhood around that building changes dramatically, all of your eggs are literally in that deal. Whereas in single family, you're just buying houses kind of, I like them in this zip code, I like them in that zip code, and you got them kind of staged around town. Or what happens when it floods? What happens when the hurricane comes through?
30 seconds.
So keep in mind there are some advantages and disadvantages in multifamily. Today we talked a lot about the disadvantages in multifamily simply because I don't ever hear folks talk about those issues. So if you guys want to learn how to do single-family real estate, build your wealth in retirement, you can do so at one of our events. We've got one Thursday night here at our office, 11451 Katy Freeway. We've also got our weekend retreat coming up. Just go to rightpathrealestate.com, rightpathrealestate.com. You're also welcome to check us out on our Facebook page. All of our events are there as well. Tom will be in the studio tomorrow, Build Your Team Tuesday, and then he and I will be both in the studio Wednesday morning. Thanks for listening, guys. Jason Bible, Right Path Real Estate.
All right, Jay, have a good one.
All right, thanks.